Hey, today is Sunday, February 17th, 2019. Taking a look at the S&P 500. ES opens in a couple of hours, but the market is closed tomorrow. So ES will trade through till 1 p.m. Eastern, um, and then and then we're done until the after hours opens as usual at 6 o'clock and 6 o'clock Eastern, and then I'll be back to business again on Tuesday morning. But here you can see on Friday we closed at 26.75, closed just off just about on our high of the day. So this is our new 2019 high and our 2019 closing high. Going into the holiday weekend, if we're going to continue higher while the regular market is closed, if ES is going to continue up higher, maybe we're looking to go after this gap here at 27.90. That's the next thing on the program for us. And when you look to the left side of the chart, that relates to this very first day of trading in December, and then the gap down open the next day. So 27.90 would fill that gap to December 3rd, the first trading day for the month of December. And coming into that day, when you look a little more sideways here on the left side of the roadmap here, this was November 30th. This was a Friday. We came right up on the 200-day simple moving average. Rallied up to that and closed. We had the G20 meeting over that weekend. We opened on Monday with a gap up. People were really not wishing to advance from here. You can see this big topping tail on the candle for the day. And then we gapped down, open the next day, and then the rest was history from there. So now we're just getting back there to take care of that gap. If we rise above 27.90, then we've got gaps going on that take us back to November. And when we look at a little bit more backed out chart of the S&P 500, we see the gaps we're talking about here are this set of candles here that were the November highs right after the election. First two trading days after the election, and then we gap down after that. So we'd be coming in to fill up that gap there. And then as we get up in here, in November we made a lower high than the bounce high we had made in October, but we made a higher closing high. So that was always kind of like a weird thing, that we had made a lower high but a higher closing high. So I think that if we do trade through 27.90 and then we fill in this gap, then this closing high that we made at 28.13.89 is going to sort of be the new line in the sand. Either we're going to rise above this and close above it, or we're going to fail in front of it and come back down. And in any case, if we do come back down, I'm going to take whatever high we get to, and I'm going to add it to this low that we made here on the 8th. This was our one little failed bounce attempt. Let me see if I can. This was our one little, failed sell-off attempt that we made at the end of February week 2, where we sold off after the state of the union, Wednesday, Thursday, Friday. And we pushed down to this low on the 8th at 26.81, and here we are 100 points later in just a week. So I would take whatever high we get up to here, add it to this 26.81 low, and divide it by 2, and I'll look and see if that winds up being the correction point that we're looking to move back to. And you can see it if we go from here to where the 200-day is and where this gap is that we left on Thursday's close. If we were to take that range and sort of double it up, it really looks like it rhymes a lot with going after this second gap from November. So I could certainly see us just trading up to there, not really taking out this 28.13 level, and then correcting at least halfway back of that. And that would fill this gap to Thursday, and it would retest the 200-day. So just some things to think about. So to summarize, going after 27.90, then 2800 flat, and 2806, and then finally 2813 and 2816.94 above that. And if we come out of the gate with futures in a couple of hours and we start to trade back down, then obviously, once again, we look for this gap to fill to Thursday's close and to test our 200-day simple moving average and to see if that holds. So Tuesday's close was 27.45, and you can see we've got a little bit of a rise on our 200-day simple moving average. So when that opens on Tuesday morning, that's going to be up at that 27.45 handle as well. And here it is on the 5-minute chart. You can see we gapped up, open to 28.60. So if we don't make it above Friday's high and we start to correct even sooner, we do have a little bit of an uptrend here, you know, from the intraday action. Maybe that's something that's going to hold us, in which case we would only trade back down to about 27.67 or so. But if we break down below that, then we have 27.60 and then finally going back and testing the 200-day simple moving average and filling this gap to Thursday's close. Okay, I hope that gives you some stuff to think about, whether you're trading ES over the holiday, or if you just want to kind of come back and refresh your memory on Tuesday morning before the open. You'll have this video to kind of put you back in gear. Enjoy the rest of your long holiday. See you later.